Hello, today is February 27th, 2021. We'll start with our disclaimer, review our calls, make a prediction, and the weekends when we always discuss the long-term picture, which I'm going to modify slightly. Well, this is my call for Monday, March the 1st. I can be completely wrong, so if you want to spend any money on this, do so at your own risk. Follow the rules of my channel or I will block you, and my email is mejt.trades@gmail.com. Looked for the pattern with the early low. That's it. And Monday's pattern has the early high. We had mixed signals. The commonest thing would be to gap and promptly trade outside the day's range. Here's a gap. We did promptly trade outside the day's range. So I guess you have to count that. Next most common is we close little change. That didn't happen, but certainly within the last 10 minutes we were a little change. So as one of my teachers in grammar school used to say, you'll get some credit. This is what we said. These are my calls for next week's patterns. We said if we didn't gap under the lows that we had many of the earmarks of a capitulation low, and that remains true. Doesn't mean you have to nail it on the head though. We had this target 38.9876. We said it was an increased risk of failure, and it did fail. I actually would prefer it not print if we're going to have the drop I've been looking for. In the morning, MeJT gave an ultimate sell signal. We dropped. MeJT said the drop was false, that we'd retrace, said these rallies were false. We'd retraced within the yellow lines, said this rally was false. We go back under the white line, said this drop was false. We go back in the range of the white lines. All those things worked. Number of things to recognize in this pattern. We have a gap up, higher high, closed under all the highs. It's a negative pattern, but the negativity goes away if we have a gap and promptly overtake these highs. That isn't impossible because we have a wall into the close. All day long we're recovering from this low. With 10 minutes left to trade, when all the big money goes home, you get this collapse. If the collapse is real, which is always possible when you're in a downtrend, we'll just keep on dropping and ideally undercut this low. If it's false, this is all panic selling. We'll gap up ideally over this high, actually over this high, but probably over this one, and we can continue the recovery. And I expect that to be clear before the open. Pay attention to this old price here. This is in the middle 37.80s, 37.86 or so. It's an old FOMC announcement price. These tends to be support areas. If we drop, we'll see why that support has a good chance of holding. Before we get into the short-term picture, let's look at the long-term picture. We had this as wave A. Here's our ABC for B. And I had us in wave blue C down, but we said it wasn't the only valid count. And we said a number of times at some point this high is going to fall. Well, if this is wave blue C, I would expect it to resemble wave blue A. And it's not so far. I mean, things could change, but this is a strong impulse and this is a three-wave non-impulsive structure. We at least have to keep our minds open to the possibility that that's A, but this is a new, this is A, B, and we're making the bottom of C. This could be an A, B, C, and that could be blue B ending down here, which is not the disastrous drop some other counts justify. It would be not a drop similar to this one, but a drop similar to this one. The less impulsive this drop is, the more realistic that interpretation is. Now this is still a sizable decline, but it's not a horrible disaster. And if that is true, then we're going to continue the rally to new highs before the year's out. I've always said we are going to recover this. There's a few things missing for a high here. One of the things missing is there are too many people calling for a high, and at a real high, nobody should be calling for a high, and that's just not present. So we're going to add the lack of impulsiveness of this decline to other reasons, some of which I can't go over, as to why this high is going to fall later. So we have to be prepared to revise our count that this isn't the end of B, but we're making an ABC, and wave B is going to end down here someplace. At this point, it's a valid interpretation. Again, it's not the only valid one. Now let's focus in on the drop from the high. Well, you always have to keep your eraser handy when you're counting these things. I have wave brown B is completed, and we're in wave brown C down. And the question is, where is it going to end? I think this is a pretty clear count for A, but it's not clear if we're ended wave B or not. You can call this A and this B. You've got good fibs, A, B, C. And if that's the count, we stop right here and we have a rally, and wave blue B is up here someplace. But it's also possible to count this as A using the alternate count. This could be B, and we could keep on dropping. If we keep on dropping, you can take the height of wave brown A, and if C is equal to A, you get about 3783.5, which is close enough to that FOMC price of 3786 to make it a realistic support level. And if that is where we are, you can take the length of A, take 50%, and you'll see that we line up at about the same price, the middle 3780s. So if we do drop, from here, I look for support in the middle 3780s cash. But if this is a false move, we're going to gap up, and then the decline ends right here. So this is one possible end at Friday's low, and then we have another possible end at the middle 3780s. There are a number of things to think this might be it, but it certainly isn't a guarantee. One is the wall. Here we have another volume spike in the E-mini contract. These volume spikes are highly correlated with market lows. Doesn't have to be exact, but if we had a rally for next week, it certainly wouldn't surprise me. We have a long-term trend line here that goes back to 2018. You can see all these delightful hits right at major changes. We are right at that trend line now. It's failed before, but it doesn't have to fail every time. We've dropped to the trend line, but not through it. And usually you either have a gap under the trend line where the trend line wins. So I think longer term we are going to hit new highs, although I think that in the shorter term I do expect a correction, and I can justify this low holding, and if not, I would look for a low around 37, 84, 83, 84, 85, somewhere in there. Mixed signals for Monday. Monday's pattern has the early high, doesn't mean you won't gap down. Typically it's a negative day with a low in the final hour. Early strength turns the tables, typically is followed by more strength in the days to come, even if the rest of the day drops. It's negative, we gapped up, hit a higher high, closed under the intraday highs, but if you gap and promptly overtake those high, all that negativity goes away. It is bullish, we have a wall into the close, an E-mini volume spike, trendline support. The equity only put to call ratio is if it's over its upper Bollinger Band, which means the public is getting too bearish too fast. And we have no deterioration of breadth on Friday's drop. I still think much lower prices remain in the cards. The drop we had last year was a significant drop, but it wasn't a disaster. You can justify a short-term low either at Friday's low or somewhere in the middle 3780s. Assuming we have a correction, there's a decent likelihood we then recover to new highs. So I did say all the way along we're going to hit new highs. I now think we might not be dropping as much as I originally thought, but still it should be significant. I don't think I want to sit through it. But shorter term, we have a pattern with the early high on Monday with a possible low here or maybe 30 some points lower. And that's today's call.